Good morning. It is Monday, April the 13th. Here's what's on your agenda. Oil and gas jump as the US prepares to blockade Hormuz. Stocks and bonds fall on renewed inflation fears. And Hungary for change. The Orbán era comes to an end.
Let's put some numbers on that. Brent crude is up quite sharply. Let's talk a little bit about where we see the energy complex going. We're going to do a lot of that today. Gas is up pretty sharply as well. Euro Stoxx 50 futures are down by 1.4. You could argue maybe they should be down by more, but actually equities look okay relative to where they could be. And you could argue it's good news for Europe, but bad news for the euro. Euro huff goes lower. The Hungarian forint is certainly rallying today on the back of Orbán's loss. The countdown to the opening trade starts right now.
Good morning, everybody. Welcome to the opening trade. Monday morning, and we have no peace deal between the United States and Iran, as we know. What does this mean for oil markets? Well, oil markets, energy markets broadly, very focused on getting product out of the Strait of Hormuz, and the developments over the weekend do not make that more likely, so no surprise that we see these energy prices going higher. What does this blockade mean then? Coming in at 3 o'clock London time this afternoon, it would seem, it means that any Iranian exports could be blocked by the United States. Yep. It means that anybody who's paid a toll to the Iranians could be blocked. The rest of the world, in theory, can get out, but does that mean a choice between going close to Iran, which you might not want to do, or going through Omani waters, which might or might not be mined? So you can see why that might not be a very tempting offer. So net, the oil market is concluding that we're going to get less product out of the Gulf.
Yeah, I'm totally with John Authers this morning. It doesn't matter who's blockading it, it's blockaded. And as a result of which, we are going to see less barrels coming out. We're going to see less gas coming out. You've seen what's happened with the European gas already this morning. It's up very, very sharply. At what rate are UK gas suppliers hedged at? I'm assuming that they've got a problem, so we're going to watch that one quite carefully as well. But yeah, if you want a barrel of oil right now, you've got a problem because they are not available. And that means that actually prompt Brent, which is hard to actually judge, is very high still. And that's the issue the world faces right now. Yes, the oil market may be signalling further down the road that things are going to get better, but they are not good right now, and it doesn't look like they're going to be for a while.
Bloomberg Intelligence crunching the numbers and saying it already costs $18 to ship a barrel of oil, a single barrel of oil from the Middle East to Asia. This blockade keeps that elevated. They're talking about shipping costs as well, maritime shipping costs, about 1,300% in terms of crude shipping costs, 1,300% above pre-war levels. Again, $18 a barrel, that's 14 times, that's the cost to move that barrel from the Middle East to Asia, that's 14 times pre-war levels.
Yeah, and to your point about running low on the physical stuff, JP Morgan saying that the last pre-war cargoes are set to arrive in whichever port they're heading to around April 20th. What happens after that, the world has to get used to, and Asia is already doing this to some degree, but maybe not enough. Europe certainly isn't. Get used to a world with a lot lower availability.
Inflation, a lot more inflation potentially coming down the pike. We'll talk to Michael Metcalf about that in just a moment. The market reaction. Let's widen the lens and think about what's happening here. Equities are down in Europe, but in some ways they're not down very much. And certainly US futures are not down very much right now. Volatility is picking up a little bit, but again, not by very much. Is the equity market, which seems to kind of make up its own narrative around whatever it wants, just looking at what the oil curve is signalling, which is, yes, we've got a near-term problem, we don't have a problem further down the road, and saying, actually, things are going to be all right? I don't know. But at the moment, the reaction seems remarkably benign. We're going into a week of earnings as well.
So the flip side to that is are bond markets more accurately pricing the risk in the Middle East? Again, we're seeing yields up, bonds selling off on those inflation risks, of course. Are the bond markets, and there has been a bit of a disconnect in terms of the bond markets pricing in more geopolitical risks, it seems, being more cautious, being more anxious about what's emanating, less resilience in the bond markets than we've seen in the equity markets. It
is an interesting one, isn't it, where this leaves us sentiment-wise, because no, we didn't get a peace deal, so we didn't get the best option, but we also arguably didn't get the worst option, because the ceasefire, as fragile as it is and as flawed as it is and as little direction as it tells us about the future, it still is in place, and so it could have been worse, I suppose. Is that going into the markets this morning?
Could it have been worse?
If we were backfiring,
sure, but is the result that the global economy cares about whether or not barrels of oil get out of the Gulf?
Yeah, that's not better.
And that maybe not. It depends how you judge what good is, and if you judge good as barrels are leaving, then we haven't changed very much. So does it matter if we're fighting or not? From a human point of view, it does. But from a economic point of view, things look pretty bad right now.
And we still don't know what happens in 7 days when the deadline, 21st of April.
We're watching the foreign, of course, and we had this in the headlines in the market check. On the back of this resounding victory, then, for the opposition party, Orbán is out after 16 years in power. This is a super majority, though, for Peter Magyar. Then this is a clear win for Europe. This is a clear knock and blow for both President Trump, the Trump administration, and, of course, Vladimir Putin, who have both backed this author and architect of so-called illiberal democracy. This is a huge result, not just for the people of Hungary, but also, of course, for Europe as well.
Does Europe work better now?
Yeah, I mean, it certainly should mean that it's easier to make decisions, because he's stood in the way of so many, hasn't he? So in terms of sanctions on Russia, funding for Ukraine, do both of those things become easier for Europe to do? And I think that's what's so astonishing about this vote. In one country in Europe, not one of the biggest countries in Europe, but it really had such an outsized presence because of the profile that the MAGA movement attached to it, and because of the role that he'd played within Europe, and because of some of our reporting recently about his relationship with Vladimir Putin. I mean, this is a story that sort of fights above its size.
90 billion euros could flow to Ukraine. That's been blocked by Hungary. We'll see if that changes. 20 billion euros potentially to Hungary itself from Europe if they make some of the changes that they have promised.
How does Europe take... Europe usually makes better decisions in a crisis. This is an opportunity. Europe has a history of squandering opportunities, but how does it make sure that it doesn't squander this opportunity, I guess, is a key question that we need to figure out. We've got some great guests lined up to talk about all of that. In fact, on that question, Susanna Vegg's going to be joining us from the German Marshall Fund. Programme officer there. She'll be joining Ollie Crook, I think, a little bit later on in the programme. Fiona Boyle, S&P Dow Jones Indices Equities Global Head, wow, is going to be joining us to talk about the markets. And Nicholas Hopton, former UK ambassador to Iran, will be with us shortly to give us his analysis of the situation.
Here's what else we are watching throughout the week then. Today, OPEC's monthly oil market report will be coming out, so another gauge, of course, as we continue to look at the lack of physical barrels on the market from the Middle East. IMF, World Bank, full meetings will start in Washington, so commentary, of course, on the state of the economy, inflation risks. On Tuesday, it's the IEA oil market report. We got the ECB's President Christine Lagarde speaking in Washington. That's on Wednesday. And the Fed releasing its beige book on Thursday. UK GDP and US jobless claims are coming out this week as well. Of course, it is the start of earnings. We have Goldman Sachs reporting later today. Bank earnings in focus to kick things off. JP Morgan, Wells Fargo, Citi, Bank of America and Morgan Stanley later in the week. We have to wonder whether, at least for the investment banks and investment banking part of the business, the volatility in the markets is going to come through in terms of the trading revenues. So Goldman Sachs kicking things off later today. Earnings and what executives have to say about the inflationary impacts, the impacts of the Middle East and Iran is going to be crucial.
In theory, it should be. But you look at some of the hedge funds and they've certainly lost a bit of money, so it's going to be interesting to see how that actually works. Higher interest rates as well. How does that feed through into the story? But what's happening with the consumer? What's happening with lending activity and all that kind of stuff as well? Earnings estimates are very high.
Yes, and so all of the commentary we get, and any downgrades for expectations, of course, from the wider earnings story will be interesting. Thinking about the banks, though, they've actually started I've seen some people making the point, they've started the year on the back foot, but because of all the news flow that we've been covering. And so if you end up telling a story of resilience for whatever reason, then maybe there is room to outperform.
We didn't talk about private credit there either.
No.
That's going to be something that's probably worth talking about too. What else do you need to know this Monday morning? Ireland's government has announced a support package to ease the burden of rising fuel costs after public anger sparked a wave of protests and blockades across the country in the last week. Measures include a 10 euro cent per litre reduction in excise duty on petrol and diesel. Relief is in addition to a 250 million euro package already approved, which includes increased rebates for hauliers and transport operators. Lufthansa faces first strike action after the union representing pilots began a two-day walkout from today. The stoppage will affect Lufthansa passenger and cargo flights, as well as departures by Eurowings. The union says Lufthansa has not made progress on demands, including pay and pension entitlements. The airline called the strike an escalation in the midst of collective bargaining negotiations. And it was a volatile weekend in so many ways. Rory McIlroy has won the Masters for a second year in a row. The Northern Irishman posted a final round of 71, finished 12 under. He was one stroke better than Scotty Scheffler, who did not post a bogey the entire Masters tournament, which is amazing. A year ago, McIlroy's playoff victory over Justin Rose made him only the 6th player with a career Grand Slam. With another green jacket, back-to-back, McIlroy joins Woods, Faldo and Jack Nicklaus as the only repeat winners of the Masters. He did not make it easy on any of us. I had to get a bet.
There's a lot more that Guy could be saying about the Masters.
I went to bed early.
There was a clear lead. What was the lead?
He had a six-shot lead. He had a six-shot lead going into Saturday, which he blew. But anyway, he didn't make it easy.
He's wearing the green jacket again.
It's been an emotional journey, you can see.
It has.
Coming up on the programme. We will get back to the European political landscape, how the opposition's win in Hungary is set to reshape Europe, with victory expected to help unlock billions of euros in European Union funding. Plus, we'll take a look at the stocks to watch at the open, including Airlines, of course, which are contending once again with higher oil prices this morning. Up next, we'll be hearing from Michael Metcalf, head of macro strategy at State Street Global Markets. Lots to think about when it comes to the inflation dynamics right now. If you want to get involved in any of these conversations around the desk, IB plus BBTV Go is the function on the Bloomberg terminal. This is Bloomberg.
I don't care if they come back or not. If they don't come back, I'm fine. Their military is gone. Their missiles are largely depleted. The manufacturing capability for missiles and drones is largely defeated.
US President Trump there speaking to reporters following the collapse of weekend ceasefire talks between Washington and Iran in Pakistan. President Trump went on to announce a blockade of the Strait of Hormuz, spiking oil prices, of course, this morning. The blockade is set to begin today at 3 p.m. UK time, so 10 a.m. Eastern time. The move set to halt at least 2 million barrels a day of Iranian oil flowing through the critical waterway. Let's bring in Bloomberg Horizons anchor Jumana Basetchi, who's, of course, bringing us updates from the region. Get us up to speed then, Jumana, we look ahead then to this blockade.
Yeah, absolutely. And it's worth also just reminding everybody that there was no breakthrough with these negotiations over the course of the weekend. And there were a couple of sticking points that both sides referenced. One of them was to do with Iran's nuclear ambitions. And the second was to do with the Strait and the fate of the Strait, so to speak. And what became apparent throughout the course of Sunday is that the U.S. have decided to do something about it and to remove this main point of leverage that Iran have acquired throughout the course of the war, in the sense that they have effectively been controlling the ships that have been getting through the Straits, and the U.S. wants to change that. So as of 10 a.m. Eastern time today, that transpires to about 6 p.m. Dubai time this afternoon, that naval blockade will commence. Now, questions about how exactly it's going to be implemented, but what we do understand is the U.S. will be sending more warships, submarines, perhaps surveillance aircraft to monitor all of the vessels' movements throughout the course of the Strait. President Trump has also said that they will start interdicting any ships that agree to pay a fee or a transit fee to get through, and then they will begin with the minesweeping exercises as well, possibly by deploying specialists or even submarines in that space too. So that's where it comes to sort of the logistics of it. A lot of questions remain, namely whether other countries will be participating as well, whether this will go alongside assistance from the Gulf states, from European nations, from NATO allies possibly. Second question is, in effect, what does it actually mean? Because you have many friendly, quote unquote, countries to Iran, the likes of China, for example, that have been using that route with the permission of the Iranians. Will the U.S. effectively stop or try to stop some of those tankers from passing through? And if so, what will be the response out of some of those key countries? The second question is, how will Iran respond to it? And are we moving to a situation where this war will shift towards a new maritime front, and that the Iranian military will be incentivized to also go after these U.S. naval warships that are going to be deployed as well? Could that undermine the ceasefire that is in place? So still a lot of questions, but what I will say is that for the time being, the ceasefire in the region that is expected to expire on April 22nd is still being upheld. That could all change in the next 24 hours.
Jumana, thanks very much indeed. Updating us out of the Gulf, Jumana Basetchi. Let's carry on the conversation and figure out what you do if you are if you're a market participant. Michael Metcalf, head of macro strategy at State Street Global Markets, joining us around the table this Monday morning. Good morning.
Morning.
what do you do now? Do we go back to the March lows? Do equities go back there? Equities seem okay this morning. They're not that bad. Oil prices are going back up again. What do I do with this new phase if I'm an investor, if I'm a portfolio manager?
I think you continue de-risking. So what we've seen so far throughout March and into early April is just a continued gradual de-risking. Obviously, we had a little bit of hope last week that the war would end sooner rather than later. Those hopes are now obviously being pushed back a little bit, and so I think it's just, again, continued de-risking. Do
we have an inflation problem?
Yes.
How big?
Big and getting bigger. And I think that's the one thing from the weekend's news, that the idea that we might have had the worst pass from inflation. I think we know that that's probably, and the worst pass from the economic impact of this. Clearly that isn't the case, and the economic impact is going to only unfold more.
Because you scrape the data, don't you? You get a lot of data on inflation. What's it telling you right now?
Well, so we already knew, of course, that March was going to be a very big number for inflation, but we have a week's worth of data for April, and the annual inflation rate in the United States, according to that data, is already above 4%, and is still rising very quickly. So this is already a much bigger shock than, for instance, March 22. A different inflation environment then, to be fair, but the economic shock is large.
Michael, does that suggest then the FOMC minutes and what we've heard from Jay Powell suggest they're quite comfortable keeping rates on hold? Does that suggest that maybe there is a potential risk if the Fed keeps rates on hold and doesn't act more aggressively to hike rates and to tighten further if that inflation shock comes through?
I mean, possibly. And look, I think obviously central banks have been very careful not to use the word transitory for obvious reasons, going back to that 22 fast that they had with that word. Nevertheless, if the inflation pressures continue to rise, there is a risk that there's an assumption that the ECB, for instance, will be happy to tighten rates into that environment, whereas the Fed won't. And so one of the things we're watching quite closely right now is the dollar and how the dollar reacts. The dollar so far has reacted very positively to the crisis in the Middle East, but that may change if we start to move on to thinking about the relative monetary policy responses.
You've said you've seen a lot of activity in terms of hedging around the US dollar. What exactly are you seeing, and what are you kind of out? Are you suggesting that the relative strength that we see in the moves into the dollar will start to fade?
Yeah, well, so here's an interesting thing. So the dollar has benefited this time around because investors came into this crisis with a large underweight. The process of unraveling that underweight and getting back to benchmark is almost over, I would say. And so now is the real test of whether the dollar is actually going to trade as a safe haven in the next couple of weeks.
Okay, I mean, good morning to you, Michael. How does the conversation about dollar dominance factor in there? Because there's the interest rate differentials that maybe is the next port of call in markets thinking. But the longer term story, I mean, I've seen conflicting things. Some people suggesting that all of this is going to be very damaging for the dollar's role in the global economy, and others saying, no, this is a reminder to Gulf countries that they need the US for protection. Volatile, unpredictable friends, but maybe they need them for protection, and so they keep buying. They keep selling oil in dollars, and the petrodollar lives on. I mean, what are you thinking about the dollar's role there?
Well, so I think the one thing that we have learned this year is that this idea that the dollar was on a long-term decline and had lost its safe haven status completely, your March was a pretty big doubt in that argument. So the dollar can play a role as a safe haven and isn't on this kind of multi-decade decline that people thought it might have been. But that all said, investors were very short the dollar going into the crisis, and it may have just been a position unwind.
Let me go to the bond markets, European bond markets, because they're just opening up, and we were talking about inflation moments ago, and oil prices are up 7%. We don't see much response, actually, in the European government bond markets. We're up 2 basis points from the French 10-year. Actually, no, the shorter end is now showing a bit. No, it's volatile. 2 basis points. It's jumping around. It's early. It's too early to draw any conclusions. But at the moment, it doesn't look as if it's a very big reaction. We actually saw 7, 8, 9 basis points higher at the 10-year horizon for European bonds on Friday, partly because of that inflation print out of the States. I mean, what kind of messages do we take from the way that the bond markets have been trading this story?
So I think a couple of things to think about. The first is that markets are quite confident that the ECB will not accommodate higher inflation generated by oil prices. And so there may be some comfort there for the long end of European bond markets. But there is, I think, an open question still for the US as to maybe the Fed will look through this, especially if the growth data starts to deteriorate. And so I think there's a bigger risk at the long end of the US market than there is at Europe.
How are you feeling about earnings?
It may be too early. I think there's going to be a lot of focus on guidance. I think Q1 will be fine. And look, equity market has a track record recently of looking through, and that's been the right
everything.
Looking through absolutely everything, and equities are an inflation hedge, of course. But clearly, there are going to be risks if this starts to impinge on growth. And so, from a macro point of view, retail sales next week is going to be big. It could be quite a bad number, and it might just. We haven't used the word. We've used the word stagflation a lot, but not the word recession. I worry that the longer this goes on, we might start using the recession word a little bit more.
Guy's very worried about the consumer. Are you worried about the consumer then?
So the Chicago Fed does a great job of collecting all the alternative data, and it actually uses our price stats data to deflate it. Their estimate for March retail sales is down 1% on the month in real terms. So yes.
So when you say recession, I mean, where are you talking about, Michael? And relatively worse where? Or just bad everywhere?
Well, so here's the thing. I think if you look at the 6 markers that the NBER used to date recession in the US, quite a lot of those markers, in fact, the only ones that aren't near recession territory are industrial production and wholesale trade, both of which could get hit quite hard by. So even in the US, where the starting point for the economy arguably is better than anywhere else in the G10, there are recession risks.
There's a quite powerful feedback loop into President Trump's thinking about his policy, isn't it? The threat that there could be a recession on the horizon. Some people use that kind of argument to suggest he'll change course, and that's why it won't be a hot war again.
Well, but here's the interesting thing, I suppose, is that, and whether he would look at this directly or not, I don't know, but the University of Michigan measure of consumer confidence is an all-time low, and that is a very long survey.
It is. It's been down for quite a long time, though.
It has been very low for a long time, and there are political elements to it as well.
Yeah.
I appreciate that, but it just highlights the kind of the consumer zeitgeist about the economy to that point.
What do stocks do in a recession?
Well, look through it, presumably. Yeah. Well, no. But I know if Maria, my equity analyst, is here, she'd say that tech is still a safe haven. Which, in cyclical terms, it may well be, actually. At least on a relative basis. Yeah.
So stocks do better in a recession?
Well, no. I mean, look, I think the thing that worries us the most is that even though investors have de-risked, there is still a significant overweight in equities to be unraveled, and there's still plenty of room for investors to go back into cash.
And Michael, you started the conversation by saying now is the time to continue to de-risk.
Yes.
Where does that take you? So tech is part of that story. What else?
Well, so that's one of the clear things that we've seen is that even though it's a big overweight, investors have rebalanced back into tech because these are cyclical risks. And if you think about earlier in the year when we had the rebalancing of sector risk, what that ended up doing was pushing you back into cyclicals, and obviously you don't want to go into cyclicals in this environment. So certainly tech, but then to be honest, just straight back into cash, because I think that the concern at the long end of the fixed income side is that lower growth and higher inflation and fiscal risks isn't great for the long end of the bond market either. So I would say that de-risking right now means out of equities into cash.
Okay, Michael Metcalf, thank you very much indeed. Head of macro strategy at State Street Global Markets. So into cash and tech, maybe some de-risking has already happened.
So what's interesting is that equity markets are actually drifting lower. Normally they kind of drift up and correct down, but there's a lot of I think there's GS is out with the research. We're kind of we're drifting down but spiking higher. So it's a complete reverse of what you would normally see in terms of equity market. And so maybe to that point, that's the kind of de-risking with kind of bounce of buying the dip in the middle. Yeah,
we'll talk to Fiona Boll. She's got some thoughts certainly on the way that you play that. I'm intrigued by these European bond markets and a lack of response really to
everywhere.
What we've seen. Yeah, I mean, oil prices arguably responding more, and maybe that makes huge sense, but not a huge amount of reaction.
And gas prices have been trading for longer today, of course. Currently, European gas futures up 7.5%, but pairing the earlier highs, actually, for gas prices. Coming up, we're going to discuss President Trump's deadline, then, to blockade the Strait of Hormuz with former UK ambassador to Iran, Nicholas Hopton. That analysis and insight coming up. That's next. This is Bloomberg.
Monday morning, good morning. 30 minutes to go until the start of cash trading here in Europe. Futures are pointing us certainly in a negative direction. The Euro Stoxx 50 down by 1.3. The DAX looks like it's down 1.4. It looks as if Europe is going to have a tougher time of things this morning than the United States, where E-minis are only down by 0.6%. Have you figured the bond market? Confusing this morning.
Still confusing, yes. So not much movement in the bond market, despite the fact we've got a 7% rise in Brent prices this this morning, back over $100 a barrel on Brent and WTI, but not much movement in bond markets. All I can say is we did see quite substantial movement on Friday on the back of the inflation data out of the US, so maybe that's already in the market's thinking, and maybe we're just waiting and watching to see how things develop still in the Gulf.
Oil and gas prices, of course, have risen on the back of the failure to get a deal in Pakistan, rising, of course, after the US president as well vowing to begin a full naval blockade of the Strait of Hormuz and threatening to retaliate in the event of Iranian resistance. Our next guest is Nicholas Hopton, Director General of the Middle East Association. Nicholas was the UK's ambassador to Iran from 2017 to 2018. He also previously served as UK ambassador to Qatar. Nicholas, thank you for your time. Will a US blockage of the Straits of Hormuz prove effective in bringing the Iranians back to the table, maybe even acquiescing on their demands, US demands around the Iranian nuclear program? Is this blockade going to work?
Well, I think it's lots of big questions with President Trump's announcement of imposing a US naval blockade on, or as he put it, any and all shipping coming out of the trying to pass through the Strait of Hormuz. I think what we're seeing President Trump's frustration and impatience to get the job done, as he puts it, bumping up against Iranian strategic patience and their resilience, both in terms of the regime but also the economy. And also, there's a big question about how sustainable such a blockade would be. I was struck by a former US admiral explaining yesterday that the imposition of such a blockade would take significant US naval assets, including perhaps even a couple of aircraft carriers, frigates, and air cover. And one must ask, how sustainable is such an effort to tie up a proportion of the US fleet in this way, when there are other things, such as in the South China Sea, where there are preoccupations. So I think sustainability, how long the president would want to pursue it, are all big questions at this stage.
How do you think the rest of the region reacts to this? What is the appetite in places like Qatar, in the GCC, for this proposed blockade that is apparently going to go into effect at 3 p.m. UK time today?
That's apparently the case, yes. And I'm sure that something will happen this afternoon and the US Navy will deploy in a certain way. What then happens is less predictable. I don't think that the blockade announcement will have necessarily been welcomed in most Gulf capitals because it doesn't move the conflict to a long-term sustainable resolution and the stability that those countries need for their economic model in the future, as in the past. In fact, it perhaps raises tensions again and certainly increases the risk of the ceasefire breaking down. Now, the ceasefire has still got about 9 days to run, the proposal brokered by the Pakistanis and others. And I think the Gulf countries in particular, like Europeans and many others, Asian countries around the world who are being hit by this conflict, economically at least, they will be wanting to see a return to talks. And it was interesting hearing the statements by both Vice President J.D. Vance and Abbas Araghchi after the first round of talks in Pakistan on Saturday. Neither of them were talking in terms of the talks of that being the final end to diplomatic efforts. And I think it was unrealistic to expect that first round of talks would lead to an immediate agreement, particularly when both sides starting from very maximalist positions, the gap between the two very large, both sides feeling they've got the upper hand. And in the US case, they seem to have, by their own admittal, gone into the negotiations wanting the Iranians simply to accept their proposals.
Yeah. Nicholas, I wonder what the role could be of China in this, given given what impact this might have on Iran's inability to get its energy products to Asia. And China has been a buyer from the region, of course. And I wonder if that's part of the calculus from the Trump administration, that maybe they would like to see China put some pressure on Iran. Has Chinese pressure on Iran ever, does that generally deliver change in Iranian thinking?
Well, you're absolutely right to highlight the importance of China's role in the background to this war so far. They've stood back largely. They benefit very much from free trade through the Strait of Hormuz. I think about half of China's oil imports come through the Strait of Hormuz, and obviously they buy a large amount of Iranian oil. At the same time, I think the Chinese have been comfortable watching their greatest rival make mistakes. And certainly the way the war was started and conducted has played to China and Russia probably more than to the US and its traditional allies. Whether the Chinese at this point will want to intervene is a different question. Clearly, they will be worried if some of their oil and energy imports are not coming through. But like India, which also benefits from trade through the Strait of Hormuz very much, they will be taking a different perspective. I think they will be thinking probably the US position this is not a fixed in stone long-term naval blockade, simply for the reasons I gave before. It is tying up a huge amount of US military assets. But also, I think the Chinese, they will be clearly talking to the Iranians and in many ways in a supportive manner. There is talk of them providing new missile or defense systems to the Iranians, which obviously if you've got Iran and the US both holding the Strait of Hormuz closed and US ships very close to the Iranian shoreline, there is a greater vulnerability should the Iranians decide to attack again, should the conflict become a hot conflict again. So the Chinese may be supplying some weaponry which the Iranians will be able to use. I think the last thought on this is I was struck by a US Democratic senator yesterday saying he was puzzled how closing the Strait of Hormuz effectively was going to open it. And I think that will be a puzzlement shared by many around the world this morning.
Nicholas, just very briefly, how long can the Iranians last? Can they last days, weeks, months? Like, what does this look like? What does the timeline look like from Tehran's point of view?
Well, one doesn't know exactly what the situation is within the country. There's been an internet blockade now for many weeks, so hard to know exactly the picture on the ground. But from past experience and performance, the Islamic Republic has a resilient economy. They call it the economy of resilience. And they've weathered sanctions for many years. Their economy is in a bad way. That's why economic protests started at the end of 2025, leading to political protests and then the massacre of the 8th of 9th January. But the Iranian regime is embedded. They will take a lot of pain. And at this stage, it's very hard to see them simply capitulating to US pressure to sign up to whatever deal Donald Trump is proposing.
Nicholas Hopton, former UK ambassador to Iran and Director General at the Middle East Association. Sir, thank you very much indeed. Let's switch gears and talk about what's happening in Hungary. The forint has surged after Prime Minister Viktor Orbán conceded defeat to the opposition, Peter Magyar, on Sunday, after Sunday's election. The pro-European party's landslide victory ends Orbán's 16-year rule and is expected to redefine the relationship within the regional bloc, the US and to a certain extent Russia as well.
We won not small, but big, very, very big. Together, we changed the Orbán regime. Together, we liberated Hungary. We took our homeland back.
The result for us is heartbreaking, but it's clear the role of governing was not given to us. I have congratulated the winning party.
Magyar and Orbán there speaking after the results. Let's get some analysis on what happens next. Oliver Crook, our chief European correspondent, joining us now from Budapest. What does this mean? How does this change Hungary? How does it change its relationship with the European Union?
It changes a lot of things very fundamentally, Guy, and also the margin by which Peter Magyar was able to crush Viktor Orbán, who is going for his fourth consecutive term after 16 years in power. He now has a two-thirds majority, Peter Magyar. That means that he can legislate very freely with a free hand over Hungary. It also means he can make changes to the constitution, which is something that Viktor Orbán enjoyed during his last term. So it's really a significant victory, but also the margin is very, very relevant. In terms of what he'll actually have to do to turn the economy around, that gets a little bit more complicated, Guy. I mean, he's inheriting some of the same problems that brought Viktor Orbán down, a stagnant economy, but he's vowed to change things, to turn things around in the economy, to sort of cut out the corruption and the graft. We heard him speak last night there on the banks of the Danube, saying that basically a large number of different appointees from Viktor Orbán should resign because they've effectively betrayed the nation, being loyal to Viktor Orbán himself and not to the Hungarian population. So really a very significant change here. Obviously has huge ramifications for the European Union. Viktor Orbán very frequently the only thorn in the side of European Council decisions, basically blocking things, including that loan to Ukraine. And we should say that really this feels a little bit like a different election campaign than many of the ones that I've covered across Europe. It was really very intensely emotional on the banks of the Danube last night. You could really feel the shift in the political atmosphere after 16 years of that rule by Viktor Orbán.
And you touch on this, Ollie, in terms of the role that Orbán played in blocking aid to Ukraine. Do we assume then, with new leadership, that aid does get to Ukraine? Because it's not an insignificant amount of money.
Yeah, it's a super significant amount of money. We're talking about 90 billion euros going to the Ukrainians. When I spoke to Volodymyr Zelensky a few months ago at the end of last year, he said that money for Ukraine is a matter of survival. And there's been one single human being standing in the way of getting that to Ukraine, and that was Viktor Orbán. The expectation is from Peter Magyar that he's going to be much more constructive in the relationship with Brussels, in the relationship with other European allies. As you know, I mean, we had a story out last week that put out that transcript of that phone call between Viktor Orbán and Vladimir Putin, in which Viktor Orbán was saying, basically, I'm here at your service, I'm here to do your bidding at the European Council table, which is really how it's felt over the last couple of years. So right now, a shift from Peter Magyar. That being said, still a bit skeptical about Brussels. You know, he put out a tweet when J.D. Vance came last week saying that basically the future of Hungary is not going to be decided in D.C., it's not going to be decided in Moscow, and it's not going to be decided in Brussels. That being said, he does have an incentive to be more cooperative with Brussels to get some of those reforms through. There are 20 billion euros sitting on the sidelines, frozen from Brussels. All of the money that was supposed to flow from Hungary that was basically blocked because many of the changes that Viktor Orbán made. And of course, the other geopolitical dimension here, J.D. Vance here campaigning on behalf of Viktor Orbán, Trump being very outspoken on behalf of Viktor Orbán, J.D. Vance going from Budapest to Pakistan, 0 for 2. The real questions about the potency about Trump foreign policy.
Yeah, Trump and Putin bedfellows on the issue of Hungary, and a knock to both of them. Oliver Crook, our European correspondent on the ground in Budapest, covering, of course, the election for us and that historic result in Hungary. Ollie, thank you. Coming up, we're going to take a look at our stocks to watch, including Lufthansa, after the union representing the airline's pilots called for a 2-day walkout from today. That is next. This is Bloomberg.
Monday the 13th, good morning. 13 minutes to go until equities start trading here in Europe. Looks like we're going to have a fairly tough open, but you could argue it could be worse. Equities certainly are down in Europe, and they're down more than we're seeing over in the United States. US futures are down 0.6%. In some ways, a very calm market reaction to what has been a very tempestuous weekend.
Yeah, absolutely. Let us think about where we are on the markets conversation in 3 minutes on the opening trade with Bloomberg's Adam Linton from the Markets Live blog. Adam, good morning to you. So not disorderly seems to be the way that you're summing things up this morning. I wonder if this is the calm before some kind of storm. We don't really know. What are you watching out for as next developments?
Yeah, I mean, like you said, we don't really kind of know how this is going to go. Obviously, the weekend's events were a negative and definitely dampens on what we saw last week. And it raises the question of, okay, what happens to these crude flows? How much extra duration does this place on energy prices? But then, given how much we rallied last week, the extent of moves we're seeing are relatively modest. And I still think that is kind of emblematic of a market which is constantly trying to look for the positives at every juncture. I think part of that is that the tail risks of the severe escalation and tax on energy infrastructure, they've been priced out. And then the fact that Iran have left the door to talks open, the US seems to be wavering its commitment to the conflict. The markets for now are still seeing this as an incremental positive. And that's why, in Asia, the Kospi is only down 1%. Nikkei, relatively small losses. US futures, the same. But whether that proves to be the case that we see throughout the week is very much an unknown. And I think we need greater clarity on what this blockade actually looks like and what purpose this serves.
And we've been discussing the fact that the bond markets, there's relative calm in the bond markets. And that's despite the fact that there is no physical oil coming out of the Strait of Hormuz, or at least very little. That the inflation risks are once again in the spotlight. And yet there's relative calm in the European and US bond markets.
Yeah, exactly. That's definitely an observation to make. The German 10-year yield opened up 2 basis points higher than the ECB rate hike bets. They've gone up to 69 basis points. But again, we still just aren't at these extremes that we were before. And I think it is a market that is hopeful that there will be a resolution to the conflict. I think, when we do get positivity, it's going to take longer for the fixed income market to price it out. There's still a lot of uncertainty of where energy lands, what that means for inflation, and how central bankers are going to respond. I think this week will be particularly interesting. I think we've got nearly 19 ECB speakers, throughout the week. So we'll learn more about their reaction function. April was priced near a 50-50 for a potential hike. So we're looking to see, how much they place on inflation, how much they place on growth, and that'll probably give us the next leg for fixed income markets.
Earnings?
Yeah. Obviously, earnings are particularly important. You guys touched on Sodexo last week. For the Europe, that was really telling how the market just wasn't really prepared for that. And, there's been a lot of commentary on the fact that European equities just aren't pricing what we're looking out for. And then for US equities, obviously, you get the banks. You expect to see record trading revenues. But the key focus will be on, what's happening for the consumer. They get much more of a real-time feel on what's going on. And, that could definitely have some impact on the market. But by the time it comes to Friday, we'll definitely be talking about the US-Iran war. That remains the key story for the market.
It does. And we spoke to Michael Metcalf earlier in the programme and said it might be a little early for the earnings story to fully reflect what's happening in Iran. I mean, we'll be looking at outlook statements, of course.
Yeah, definitely. And that's kind of similar to what we've kind of seen, for inflation as well. We have seen what core inflation is doing. We're still in the early stages of it, even if it doesn't feel like we are. We've been battered by headlines for weeks, but there's still a lot more uncertainty, and we may not get too much more clarity on it this week.
Adam, thank you very much indeed. Am Linton from Bloomberg Markets Live team. Remember, you can get up-to-date analysis and insight from Adam and the rest of the team. Just go to MLIV Go on your terminal. Let's get your stocks to watch now with Chloe Mellet. Chloe.
Good morning, Tom. Oil and gas majors are, of course, on the agenda today after the US and Iran failed to reach a peace agreement over the weekend. And Trump also threatened to blockade the Strait of Hormuz. That has, of course, led natural gas prices and oil prices to surge. And so this could result in all of those names up here on the board moving higher today. It is worth noting, as some analysts have said, that Trump may or may not follow through on this threat, but that the threat itself really risks increasing the odds of miscalculation, reducing the space for diplomacy, and also putting additional pressure on those oil markets. So definitely one sector to watch out for today. Moving on to the other big story from the weekend, which was the elections in Hungary. And Magyar defeated Viktor Orbán and promised to bring Hungary closer to the EU and to dismantle the authoritarian system that was put in place by his predecessor. And we had seen those Hungarian stocks, this Hungarian index, already outperforming the S&P and the Stock 600 in the month preceding the election because of those expectations that Magyar would win. And so this victory could extend those gains in that Hungarian index this morning. And finally, Lufthansa is having another tough day today, has been having a tough start to the year overall. It is now facing strike action with a 2-day walkout from pilots starting today. And so this is creating additional pressure for the airline, given it's already facing those higher jet fuel prices because of the war in Iran. And so we have seen Lufthansa shares see a lot of volatility since the start of the war in late February. And so this weakness could really continue today on the back of this strike action.
Chloe, thank you very much. Chloe Melly with the stocks to watch. So a couple of reasons to watch the aviation sector then as she was going through. Guy, we were talking to the former British ambassador to Iran earlier on, and really interesting to get his insights on what the blockade could mean, what added strategic dimensions that brings. And you made a good point that, what happens if a tanker tries to leave and the US does actively intervene?
Particularly if it's a Chinese one.
Yes. And what kind of dramatic territory does that potentially take us into?
So the other risks are that US naval assets, according to the analysis I've read, have to be slightly closer. They're a long way from the Iranian coast right now. They have to move in slightly closer. That potentially puts them in target range. The other risk is, does Iran reach out to Tehran, reach out to the Houthis and say start to target the Red Sea, and what impact that could have? And then does China, to what extent on the China question, does China pick up the phone to Trump and say, do you know what, this state visit of yours is imperiled if you don't allow Chinese ships, or at least Chinese cargoes, to exit?
Is
China going to sit back and just let this happen ahead of that meeting?
So many things to think about this morning. What do you do if you're a copper smelter? Do you have the sulphur to be able to do that? What happens with hydrogen supplies? What's happening with the chip production story around that? What happens if you want an MRI, apparently, in the UK? Just keep everywhere. Just keep an eye on all that kind of... The implications of this, you start modelling it out, just get bigger and bigger and bigger. And the longer it goes on for, it's not just a problem for markets, it's a problem for the consumer, it's a problem for society. The Irish are giving people money to try and support them through this energy. Can other European governments
They have the balance sheet to be able to do that, don't they, in Ireland?
Yeah, and there was talk last week in Italy about whether that might be something they might do. We saw the bond markets a little jittery around that story in that particular moment, so we'll certainly watch that particular dynamic. But a lot of headline risk still could hit this market, even if things look fairly calm right now. I don't think that tells us anything about where we end the day, basically. Where you started isn't the full.
And over the last few weeks, we've been higher at the beginning and lower at the end of the week. So is that a trend that we're once again going to see? Futures certainly negative this morning. We're starting on the back foot. Not that much, though. I'm curious to see what the VIX does as well when it opens up shortly. Anyway, lots to talk about. The market open is almost upon us. Plenty of details to follow. This is Bloomberg. Monday morning, good morning. It was a nerve-wracking weekend on so many fronts. We come to Monday morning, try and figure out what happens next. Difficult to do. At the moment, cautious response in most markets at the moment. This is the picture in terms of the session we saw on Friday in the United States. I think we're about to show you US futures, which will probably be an easier thing to show you. Those are European futures, which Tom is going to do in just a second, so this is going well. Basically, futures in the States are down, but not by much, 0.6%. We're getting a reasonably cautious response stateside. The market is looking reasonably positively at what we got over this weekend and certainly trying to see the glass as half full. This is basically what you've seen. So we kind of stagger sideways into the end of trading over in the United States Friday. We have gapped lower this morning, but we're not down by much, which is astounding in so many ways, Tom.
It is caution, it's risk off, but it's not capitulation, to your point. Let's bring the futures pulled back up then. European futures pointing lower by 1.2%. A little bit more resilience with the FTSE 100 futures pointing lower, as you can see, by 0.5%. Energy, of course, in focus. Will it be something of a ballast for the UK equity markets? We'll also watch travel and leisure. Airlines in focus as well. You've seen airlines selling off in the Asian session. DAX futures pointing lower by 1.5%. Individual stocks in focus, Anna.
Yeah, in fact, just a lot of sectors and geographies to focus on. Hungarian stocks, of course, for reasons connected to the election there. We've seen them predicting the outcome, though. So Hungarian stocks actually did better than European stocks last week because of the polling was suggesting that we'd get the outcome that we did. A super majority, it seems, is in the works for the opposition. Oil stocks in focus, as you say, Tom. Airlines also the other side of that same story. So oil may flatter the London market a little bit. We will watch for that. Energy prices up substantially. Stocks expected to be down a bit then, Guy.
Yep, looks like that could help London out. We'll see how Shell and BP, etc., trade this morning. What happens to the miners, I think, is interesting. Right, here we go. Let me show you some numbers and tell you what's happening first thing this Monday morning. We are expecting European stocks to drift lower. We haven't got the full picture out of London yet. London's expected to be down around 0.4%. Could take a while to get the DAX open this morning. It certainly is going to take a fairly substantial hit. Let's call it north of 1% to the downside. FTSE 100, though, as you can see, it's certainly not taking it on the chin in the way that you would argue other markets could. I think it's going to be interesting to see how the oil sector trades this morning. It certainly is likely to see some positive trading on the back of this. Oil is up quite substantially. So the IBEX is probably a useful tell here. It is down 1.1%. We're expecting the CAC Iran to open somewhere similar. We're expecting the DAX to be a little bit more dismal. And we'll show you what the Hungarian markets are doing in a moment. We've already got early indications that actually the banking sector there certainly looks like it's going to be a positive. But at the moment, the Stock 600 is only down by 0.6%. Tom, what does the sector story look like?
Well, to your point about the DAX and the futures, or at least the picture, the prospects for Germany, autos amongst the biggest losers as a sector, down 1.4, almost 1.5%. Travel and leisure, of course, not surprisingly, also amongst the biggest losers right now as a sector, down 1.5%. So that is a leading loss coming through. For travel and leisure, autos down now 1.6%. So autos, travel and leisure, banks also hit down 1.4%. On the upside, again, not surprisingly, energy is the top gainer across your sectors, gains of 1.1% in the energy space. Telecoms often gaining on risk-off days. That sector currently flat, Anna.
Yes, it's no surprise, as you say, to see energy stocks higher. Some of them higher by more than 2%, as we've got UK natural gas prices up by 9%. The TTF benchmark over in the Netherlands up by 7.3%. Oil prices up by more than 6%. So all of that adding up to a decent day for energy, but not for much else. So, yes, airlines and autos, the worst performing sectors this morning.
It's interesting that so oil is up. Shell, BP, Total, Equinor, Eni, Repsol dominating the top side when it comes to this market. As you say, reasonably wide dispersion in terms of their various exposures to sort of different markets. What is interesting is that ASML is down pretty hard. So that's interesting going into a week of earnings. The banks certainly are under a little bit of pressure. And then it's a really eclectic mix in terms of where we're seeing the losses. ABB is down, so the industrials are down. Rolls is trading a little softer. LVMH, we're going to learn a lot this week, I think, in terms of the luxury sector as well. There's some notes out already this morning. Other than oil being up, is there a clear theme this morning? It's the market's selling a lot of things, but it's not an obvious basket.
Let's get some further analysis on what we're seeing on these markets this morning and into a new week. Fiona Boll joins us, Global Head of Equities over at S&P Dow Jones Indices. Fiona, nice to have you with us. Thank you for joining us. I guess, do you think stocks were kind of vulnerable today to the kind of news flow we had at the weekend, obviously, around the failure of the peace talks? Stocks were vulnerable even more so because of some of the gains we saw on the ceasefire last week. So give us that kind of context around what we're seeing.
Yeah, I mean, certainly the S&P 500 had a very strong end of last week, and actually now it's pretty much flat year to date, which is impressive given the volatility and the moves that we saw, particularly during March. I think the news over the weekend was, it would appear, largely priced in. I'm not sure anyone particularly expected the best result from those negotiations. But the equity markets have proved really resilient.
For the moment. We'll see how long it lasts, won't we? But we're not seeing, you saying in your notes before our conversation this morning that you're not seeing signs of systemic stress. And there is a sort of, even when moves seem to be quite large, does this market not look panicked then? Certainly not this morning, but even in recent sessions.
I think above the water, it looks, surprisingly calm. I think underneath, we're doing this. We're seeing higher dispersion. We're seeing lots of rotation. We're seeing rotation, out of the darlings from last year, whether that's, largely tech and financials. And we're seeing return interest when we look at ETF flows in materials, energy, mining, even consumer staples.
Earnings are about to start. Quite excited. What do you think the earnings calls are going to look like? What you're a CEO right now, and you don't know. How do you communicate to the market? What do you tell the market?
I'm not sure first quarter results are really going to be what the analysts are asking about.
Yeah.
I think they're going to be, dissecting every word that the CEO and the CFO says about impacts of energy prices, impacts of consumer spending, look through into inflation. And so, I think it's definitely going to be those forward-looking statements.
Anna was making the point last week, and I think it's a really good one, that at the moment analysts aren't changing their calls because they don't know. They don't have the right inputs in order to make changes. Does that change after those earnings calls?
I think they start to read into that commentary that's coming from the C-suite. So you would expect that once they get some additional commentary, maybe they'll be in a position to change their calls.
Where is the resilience right now across the equity space? You're talking about that rotation, and then under the headline basis, you're seeing a bit of churn. Where are investors finding resilience in a higher inflation environment?
You know, what's been really interesting in the first quarter of this year, we saw flows move from the S&P 500 into the S&P 500 equal weight. So, you know, last year we saw lots of investors really lean into that high concentration, and we've seen that flip. So if you look at the performance of the S&P 500 equal weight, you know, it's up a couple of % year to date. So it's outperformed the 500. That hasn't happened for sort of 5 or 6 years. And so we're seeing that rotation out of some of that sort of high concentration, high conviction into more broad-based equity exposure.
I want to touch on what's happening. A massive 24, 48 hours for Hungary and the ending of Orbán's rule after 16 years. Hungarian stocks are gaining a little over 3%. The foreign is on a tear. Is this broader-based, longer-term positive for European equities, the Hungarian story?
I think we've certainly seen, again, so far this year, the S&P Europe 350s had a relatively good start to the year. We've seen flows already, again, as they've moved out of US equities, they've moved into European equities. So you would have to expect that you will continue to see that interest in the European markets.
I just want to go to a few comments we're getting through from the Iranian armed forces saying that there's no security for Persian Gulf ports if their own are threatened. So this is suggesting that other parts of the Persian Gulf, other countries within the Persian Gulf, shouldn't assume that their ports would be safe if the Iranian ports are not. They're saying enemy-affiliated vessels will not pass through Hormuz. So this goes to some of the complexity around the blockade and who exactly is blockading what. And the US restrictions on vessel movements are illegal and piracy. And so we've seen these suggestions from both sides, I guess, that extortion is taking place, and in the words of the Iranians here, piracy. We are vulnerable to a lot more headline risk, aren't we, around the specific dynamics of this blockade. We were talking earlier about what kind of sudden geopolitical tension might be thrown up by a particular vessel trying to leave and being intercepted by somebody. How should we think about that? We used to talk to you, Fiona, before we talked to you about stocks. We used to talk to you a lot about commodities. So how should we think about that kind of risk this morning?
I mean, it's definitely that transmission mechanism into equities is from geopolitics is the energy market. So I think, you know, day to day, you've just got to continue to watch the price of oil. I would be looking also at the other energy markets, particularly European natural gas. We know that Europe is much more dependent on imported energy. It's also closer to where we're seeing the troubles. And so there's greater disruption risk there. But yes, we're definitely seeing that it's the energy market that's driving the other asset classes, and I would expect that to continue.
Are equities an inflation hedge at this point?
That's a great question. I certainly think there's probably pockets of the equity market that are better inflation hedges than others.
Okay. In aggregate, there are definitely pockets. You can look at the energy sector within the equity market, but broadly, with a consumer that already looks stressed, can companies raise prices? Can they pass this along? If this hits my balance sheet, can I pass it along to somebody else's balance sheet? That's the idea. And equity markets are always looking for the positive. And I'm already hearing this morning people talk, it's an inflation hedge, it's an inflation hedge. Is that the new equity narrative here?
I think you're right. I mean, I certainly think, again, there are sectors in the economy where it will be very, very difficult to pass on price increases.
Right.
And you think about the consumer.
Yep.
You know, you think maybe about some of the materials. So I think whether it's an inflation hedge at a broad level is maybe less clear than others expect.
There's a line from Germany's Chancellor right now, just in the last couple of minutes. They're going to be cutting the gasoline tax, 17 cents cut per litre for 2 months. You'd imagine that Prime Minister Keir Starmer will be looking potentially
Germany
over in envy, because Germany can do that. Ireland can do that. So I guess my question is, there's live pictures right now at the German Chancellor with these announcements to try and offset some of the pain that's coming through for consumers. Other countries don't have that scope. As investors, should investors start to price in additional fiscal stimulus, at least from some nations, to support the consumer?
As you said, there are many nations that can't afford any significant level of stimulus, but where they can, I think it seems likely. We've seen, you know, we go back to COVID. You know,
so how do you play that across equities?
I think you need to understand the country risks specifically, as opposed to taking a broad view, say, of a global equity. You probably need to be picking and choosing around those countries that have the ability to support.
We're going to hear a lot more about this week, aren't we? Because it is the IMF and World Bank spring meetings. They like talking about where there's fiscal space and, crucially, where there isn't any. And we've already heard from Georgieva going into this about the lack of fiscal space that a lot of countries have to respond here. So we're seeing response, as you say, from Ireland, from Germany. We are going to hear from the UK later on this week, but it's not expected, perhaps, to come with quite so much generosity. How do you think about that kind of development then, Fiona, from here as we... bond market's not really responding very much this morning. There is a big link between the bond market narrative into stocks, but bond markets are quite calm in the face of everything.
They've been very calm. What's also been interesting is we've seen periods recently where the equity and the bond markets have moved together. So that usual correlation seems to have broken down. It's hard to know. I'm not a bond expert. Hard to know what to read into that. But again, I'd be looking at things like inflation expectations.
Fiona, great to see you. Thanks for stopping by to see us. We always appreciate it. Thank you very much. Fiona Ball, Global Head of Equities over at S&P Dow Jones Indices. Equities are down 1% across most of Europe. Hungary's a bit different. Euro Stoxx 50 down by 1%. In terms of some of the big heavyweight stocks, let's just kind of look and see what is happening there. What you are seeing is a little bit of weakness maybe in some of the tech stocks. You can see that with ASML. It's certainly a heavyweight. Defence stocks are up, which is interesting as well. An expectation maybe actually the more spending is coming. They've been very choppy recently. But let's dive into the moves and get a little bit more detail, particularly on the energy front with Chloe.
Good morning, Guy. Indeed, we are seeing oil majors moving higher as expected this morning because oil and natural gas prices are soaring after the US and Iran failed to reach a peace deal over the weekend. And Trump also is threatening to blockade the Strait of Hormuz, which would disrupt even further those global energy supplies. And so we are seeing that translate into quite a positive picture, a green across the screen for the oil sector this morning, with Equinor in particular moving higher. On the other hand, we have got airlines, of course, weaker in the wake of this, and we are seeing Lufthansa in particular down because not only those higher oil prices mean higher fuel prices, but also because Lufthansa is facing strike action with pilots walking out. So we've got a bit of a double blow there for the airline, but across the sector, very weak as well. Another sector that's usually not doing so well when peace is looking increasingly fragile is miners, and we have got gold and aluminium moving lower, and so we are seeing those miners with those exposures to those metals also moving lower. So Hochschild and Fresnillo on the gold side, and then Antofagasta more on the aluminium side as well. Moving on to Wise, and the London-listed company is moving higher today. It's got a positive trading update and also said that its dual listing in the US is on track for this quarter. So that's a positive development there, according to investors. And finally, Hungarian stocks are also in the green today after Peter Magyar defeated Viktor Orbán in elections over the weekend. This victory is seen as providing some economic upside for Hungary, and therefore we are seeing the BUX move about 2% higher this morning.
Chloe Melly with some of the individual stocks on the move. Thank you. So we heard about Chancellor Friedrich Merz in Germany cutting a tax on gasoline prices. We're hearing as well from the Chinese spokesperson talking about the conflict in Iran and saying and calling for all sides to exercise restraint in the Iran conflict as we count down to that blockade. In theory, starting at 3 p.m. UK time to 10 a.m. US time, that of course could impact China more than many others, given its consumption of 90% of Iranian crude.
That's quite a restrained response from the Chinese. It's certainly exercising restraint in terms of its commentary, considering how exposed it is.
And that's been consistent, that constraint.
Very exposed, and ahead of the visit of President Trump to China, plenty of opportunities for China to sort of grandstand around this theme and maybe not take it. But you wonder what messages are being delivered behind the scenes. We'll wait for that to become uncovered.
Yeah, and whether that meeting between the two presidents is in peril. There's no suggestion from China that it is at this point. Maybe that's why they are being relatively constrained. They want that meeting to happen for whatever reason in May, of course, between the two presidents. Well, coming up, we'll get more details, more analysis in terms of what's happening. We're seeing, of course, European gas prices, futures and oil all higher this morning. Gas surging as the US vows to implement that blockade of the Strait of Hormuz later today, as peace talks, of course, failed in Islamabad over the weekend. More details next. This is Bloomberg.
Welcome back to the opening trade. 18 minutes into a session that is better than the futures picture had suggested, at least. We are down, but down by 0.7% on the Stock 600, which, given oil prices are up by 6.8% on Brent, maybe is quite muted, quite relaxed, call it complacent if you like, but that's where we are on European stocks. Only one sector in positive territory, as you might expect, or just two, energy. Is by far and away the best.
This is not good news, what we are seeing in the Gulf for global airlines. European airlines in some ways are hedged, but actually I think that's going to be an issue to see whether those hedges deliver. Airline stocks are certainly under pressure. It doesn't really matter who is blocking the Straits of Hormuz. We are going to see potentially a shortage of jet. Another headwind for a sector that's already seeing significant disruptions as a result of the conflict in the Gulf. Benedict Campbell leads our aviation coverage. He's our managing editor. Benedict, let's kind of just talk about what happens next. We are getting awfully close to the point at which Europe is going to be running out of jet fuel. What happens next if this carries on? When do we start to see an impact? We've already seen maybe some of the Italians' airports starting to run out. Is that something we're about to see replicated elsewhere?
It might very well happen, Guy. So, as you said, Italy has already given us a bit of a taste of what might come. If you look across to Asia, again, we have seen pockets of shortage there. If this drags out, then it really will become a big issue across the region. Lufthansa this morning particularly is down. They're obviously impacted by the strike. That is sort of a double whammy for them. But again, I think there's a general sense of alarm in the industry. How much longer can airlines absorb this? How much can they deal with the lack of fuel that invariably will happen at some point? For now, it seems that they have enough and that there is enough to go around. Donald Trump has said, we'll just come over here and we'll fill you up. But it's not that easy. This is a very finely tuned global sort of network, and you can't just go elsewhere. And will we have some sort of what's called tankering, whereby you take some extra fuel, you fly somewhere where it's still available? We might see some of that happening. But again, fuel is a massive cost, and it's going to be a massive headache for the industry.
How do you expect? Good morning, Benedict. How do you expect the airline industry to adapt and adjust to that? Then, do we see routes cancelled? Do we see higher prices as energy moves higher? Do the consumers brace for higher ticket prices? Do routes start getting cancelled?
Well, we are already seeing all of what you just mentioned, and we'll probably see more of that. So if you look across the globe, what's happened in the last 5 weeks, you have had airlines take out routes. So United notably said, we're going to stop flying certain so-called red-eye routes that weren't really very profitable to begin with, and have now tipped into the unprofitable segment. So why would we fly those now? We will take a hard look at some of our slots and so on. So already airlines are pruning their networks, and you should expect more of that to happen. We've seen a massive increase in so-called fuel surcharge costs. Some airlines have done it once, twice, maybe even 3 times. You've seen airlines add costs on things like extra baggage. So this is happening across the industry, and as this crisis intensifies, you should expect this to get even more pronounced. And this is particularly going to hit consumers as we head into the busy travel season. Summer isn't that far away now. People are booking at the moment, and you can see the prices really go up for tickets, and that's probably not the end of it.
So management having to deal with that and all of the drama that is created there, and the need to find those fuel resources. But Lufthansa also facing a different challenge, a 2-day pilot strike, Benny, set to cancel hundreds of flights. Bring us up to speed.
Well, and this happens, a weekend after they just got over the last strike. So this is an airline that's slowly becoming unbookable and ungovernable. If you think of it as a consumer, or if you think of it as management, they are really struggling to get these strikes behind them. We've had cabin crew strike last week. We now have the pilots, and that causes massive disruptions for the airlines. Hundreds of flights in places like Frankfurt and Munich, and then that also means planes are out of position. Lufthansa says it's irresponsible. They say the demands are unacceptable. It's principally around pension costs. They will say, look, pilots are already very well paid, particularly those at the mainline Lufthansa airline. And what you will see over time is more business shifting to their sort of lower cost subsidiaries, be it the Eurowings business, be it the Discovery line. So you will see more of those shifts happening as Lufthansa tries to sort of cut the costs at its mainline business. It's a really bad time for them. As I said, it's summer travel period, and they are celebrating their 100th birthday. So this is not how you want to celebrate your birthday. This is not the kind of sentiment you want to leave in consumers' sort of mouth, where you feel, well, this is an airline I really can't book anymore.
Yeah, Lufthansa stock down 3.8% so far in today's session. Benedict Campbell, our aviation managing editor in Berlin, thank you. Let's get more on the oil picture and what exactly is happening in terms of that blockade and how it could impact oil prices going forward. Anthony DePaola, our Middle East energy markets reporter, has some of the details. Anthony, what does the US hope to achieve ultimately with this planned blockade that could come into force as soon as 3 p.m. UK time today?
Good morning. Yeah, there's multiple objectives that the U.S. wants to achieve. The immediate term one looks to be that Iran agrees to reopen the Strait of Hormuz. So in that sense, the U.S. is blocking it in order to reopen it, putting the pressure on Iran so that it's not able to get any of its oil or any of its ships or ships linked to it through the strait, so that it has to come to the table and agree to that opening. Of course, that was part of the talks that the U.S. and Iranian officials were holding in Pakistan over the weekend, with the main goal being there to get Iran away from its nuclear program. Those talks didn't work, and so that's why we're getting that this idea of the blockade in there, because we really need to have the free flow of oil, refined products, natural gas through the Gulf. Right now, everything is effectively cut off. Iran is exporting some of its own oil. It's letting some ships go through, apparently charging them as well. We've heard levels of about $1 a barrel, so that's $2 million for the largest tankers. When you're talking about prices over $100 a barrel, perhaps that's a doable cost for some people, but for others, it's just a bad precedent. We saw the CEO of the UAE's biggest producer, ADNOC, coming out this weekend saying that's a dangerous precedent to have anyone charging anything for going through the Strait of Hormuz, that the Persian Gulf needs to be open and freely traveled by everyone, and that's what's needed to get those barrels back to the market. That same ADNOC CEO is saying more than 200 oil tankers trapped in the Gulf, and that we're finally seeing the last of those barrels that left in February hitting customers. So we're really going to start seeing that physical shortage hitting the markets right now.
Okay. Anthony, thank you very much. Anthony DePaola, our Middle East energy markets reporter. Coming up on the programme, we'll return to European politics, where Peter Magyar has swept Viktor Orbán from power in a landslide Hungarian election result. We will discuss the ramifications. We'll be live on the ground in Hungary for that conversation. This is Bloomberg.
This is the opening trade. We are 30 minutes into today's session. You are seeing risk off across the equity markets, but you're not seeing panic, really. You're seeing stocks down across the European benchmarks by around 0.6%. The FTSE 100 is showing the most resilience. Energy is helping to offset some of the other losses. And so you're seeing the FTSE 100 down 0.4%, but that compares to losses of almost 1% over in Germany. The DAX is down 0.9, almost 1%. 0.9% drop over in France as well. The CAC 40 is lower. 0.7% is the move lower on the FTSE MIB. So yes, losses, but not capitulation at this stage. Guy.
Tom, 122 up, 121 up, 462 down. Basically 4-1 in terms of the ratio, in terms of the winners versus losers. Volume's not huge, though. In some ways, you could argue the market had positioned for this. You're not getting a big reaction. Certainly, that would be the message that you take away from the volume picture this morning. Quick look at what is happening in terms of the leaders and the laggards. Let me just show you a few names out there that are maybe worth paying attention to. As we've already indicated, oil stocks are doing relatively well. You have a market that is certainly rewarding those stocks. So BP is tracking a little bit higher. You've got Rheinmetall up on a missile defense deal, and you've got Wise. Nasdaq listing is firmly on track. In terms of where the downside is, let me just show you. You've got EasyJet representing the airlines, is softer. SML is definitely softer this morning, and it's interesting to see that the banks are also edging off a little bit this morning too. This as we go into US bank reporting season. Anna, that's what we're seeing in terms of the market story.
Yeah, those are the individual, the market themes. Let's get to some of the broader news narrative this morning. US President Trump has vowed to begin a full naval blockade of the Strait of Hormuz and threatened to retaliate in the event of Iranian resistance. The blockade will begin at 3 p.m. UK time. The move set to halt nearly 2 million barrels a day of Iranian oil flowing through the critical waterway. The announcement comes hours after Washington and Tehran failed to reach a deal during talks in Pakistan. Spain's Prime Minister Pedro Sanchez has started his trip to China by calling on Beijing to leverage its influence internationally and help bring the wars in Iran and Ukraine to an end. Speaking at the start of his official visit, Sanchez also used stronger language than in the past on trade, calling the EU-China deficit unsustainable and saying trade relations must be balanced and reciprocal. And Hungary's forint, the currency, has surged to a 4-year high after Prime Minister Viktor Orbán conceded defeat in Sunday's election, bringing to an end his 16-year rule. Incoming Prime Minister Peter Magyar has outlined sweeping changes that are expected to redefine the country's ties with the European Union, with Russia and with the United States. Tom.
Well, let's get more analysis on that story and bring in Bloomberg's chief European correspondent Oliver Crook, joining us now from Budapest with a guest. Ollie.
Yeah, that's right, Tom. I mean, on the banks of the Danube at the party that Peter Magyar held yesterday, really a very emotional scene. I couldn't tell you how many people were there, but it certainly felt that it was within the tens of thousands, really a changing of the guard and a sort of new era for Hungary. And here to joining me now to comment on that is Shoshana Vek, who is an analyst over at the German Marshall Fund. Thanks so much for joining us this morning. I'd like to just begin by marking the moment and really sort of for you to designate for us sort of the significance of this day for Hungary.
This is truly a historical event. We had the highest turnout of any election. TISA got really the highest number of votes of any party since the regime change. It's very significant domestically, but also for the European Union, as it had serious difficulties with dealing with the Orbán government over the past several years. So this may mean a shift in policies, a shift in attitudes that can make the European relationship more viable.
And as difficult as it was to get elected in this context, to say with the sort of media control that Orbán has, the sort of structural advantages that he had, of course the financial advantages he have, in some ways the hard part starts now, and that is governing the economy, governing the politics. He vowed to basically break the grip that Orbán had over the government. Talk to us a little bit about how far that grip goes, whether it's within the sort of constitutional court, the Supreme Court, and how difficult that is going to be.
Essentially what characterized Orbán rule over the past 16 years was a complete state capture. And beyond that also a domination of the public space, media, and so on. So with the 2/3 majority that Péter Magyar now has received, it is possible to actually change the constitution, to adopt new reforms, and he has an easier way than expected to break this grip. But it extends to the Constitutional Court, the President, the National Bank, the state prosecution. He will also inherit a depleted budget, and the country has not seen any growth ever since the COVID pandemic. Inflation is still high, but if we look at the first reactions of the markets and the forint this morning, it is starting to actually get stronger. So there is an expression of anticipation and trust towards an incoming new government.
And in this sort of political change that we'll see, which is a closer relationship with Europe, I think he's also hoping to unlock some of the 20 or so billion euros that have been locked out of Hungary due to rule of law concerns and a great many others that the EU has frozen. How quickly do you think that money can sort of be flowing into the economy, and where do you think that money will be allocated by this new government?
He will need to adopt very quickly anti-corruption reforms and also reforms concerning the judiciary. Some of it will be very fast. He will be joining the European Public Prosecutor's Office, and the idea is also to set up an anti-corruption agency. Now that he has the 2/3 majority, he will have a much easier time to actually adopt the reforms that can speed up the process. But actually he has to work with very tight deadlines on the side of the the European Union for the recovery funds. It's only a couple months left to unlock that. So it's going to be probably a negotiation process to actually get this moving. And the key sectors to invest in will be probably infrastructure, probably energy, especially if there is an intention to diversify Hungary's energy dependence from Russia. Those would be key areas, but also the social sector will need massive injections.
And also thinking about other dimension of the economy, there's been a lot of statism, a lot of sort of state-driven activity. Of course, some of it by the allegations of corruption and the friends of Orbán. How much sort of how optimistic do you think the market can be about a sort of more liberal economic policy going forward from this government?
Where I see a relatively expectable move towards liberalization is the anti-corruption reforms, which will open up competition for various actors and not limit the opportunity for like-minded and affiliated businesses. That will be a big shift.
And thinking about also the geopolitical sphere of this election, because I think you'd be very hard-pressed to find a nation of fewer than 10 million people that has had so much attention from the international stage, whether it's China, the United States, the EU, Russia. I'd like to go through that list with you right now. The impact and the relationship, starting first with the United States. J.D. Vance was here over the last couple of days campaigning pretty aggressively for Viktor Orbán. How do you anticipate that relationship will change, or will it not really change at all?
I think it will develop into a two-track relationship. The ideological alignment that has been present between the MAGA movement and Fidesz can continue also on a party level, even if Fidesz remains in opposition, although maybe in that position Fidesz not going to be that appealing. But on the interstate level, I expect that Péter Magyar will seek a normalization of the relationship and diverting it back to the classic channels of diplomacy. And if we look at the geopolitical interests of his incoming government and the United States, as far as we can understand both, there can actually be strong alignment, particularly when it comes to Russia's presence in the region, that both Magyar wants to get rid of and the United States is not looking at it favorably.
And also thinking about the relationship with Russia and Ukraine, there is sort of a lot of hopes, I think, put into the figure of Péter Magyar. What the reality will be is what I'd like to get from you. How pro-Ukraine do you expect him to be? Will he allow for that 90 billion euro loan to get through? And how anti-Russian do you anticipate he will be?
I don't expect him to be pro-Ukrainian, but I also don't expect him to be anti-Ukrainian. What we have seen from the Hungarian government under Orbán was a representation not of Hungarian national interests, but those of Russia. And that sort of policy, which manifested in constant vetoes, will stop, I believe. We will see a shift more towards what are Hungary's interests, and in that regard there will be conflictual things to resolve with Ukraine. But when it comes to support from the European Union to Ukraine, at least in the financial domain, as long as it's not something that directly puts extra burden on Hungary when the country's economic situation is quite bad, it could go forward.
But what about the proximity to Russia? I mean, you're struck when you go to Eastern Europe, even among the most right-wing politicians within Eastern Europe, the right wing within Western Europe is pretty pro-Russian. On the Eastern Europe, that is not the case, with the exception of Hungary.
Yeah.
Why is that the case? How effective was Orbán in sort of convincing the Hungarians that Russia is an ally? And is Péter Magyar going to change that perception?
Orbán didn't really manage to convince Hungarians of Russia being a friend. So there is no clear pro-Russian sentiment. It was rather an anti-European and anti-Ukrainian sentiment that Orbán managed to convey. That's somewhat picked up, at least in his electorate. But there is no deeply rooted pro-Russian sentiment in Hungary. So I think that will be relatively manageable to shift away from, and Péter Magyar is likely going to work on that. One of the key slogans of the last weeks of the election campaign on Magyar's side was to send Russians home, to reclaim Hungary's sovereignty from
that's something I heard from a lot of the crowds that were speaking last night.
Absolutely.
So Shoshana Vek, thank you so much for your time there this morning with your analysis there from the German Marshall Fund about this new dawning age here for Hungary.
Ollie, thank you very much. Bloomberg's chief European correspondent, Oliver Crook, in Budapest. And we've mentioned a few times the wide political significance that this has in Europe and further afield. I wonder if this changes the relationship between MAGA and Europe at all. I wonder if those on the right of politics in Europe looking to be ascendant, whether they think carefully about the relationship they have with MAGA. That's one sort of political dimension.
Trump ducked all the questions when he was asked about this last night.
They've made it pretty clear that their strategy is to intervene in European politics to get the kind of governments that they would favour. And Orbán was a case study of that, and they failed. JD Vance was explicitly. It's not the first time the US has intervened, but explicitly is pretty unusual. Both Trump and both Putin intervening directly in this election and failing.
And it seems that the market is we're risk on around Hungarian assets, aren't we? Yeah. And clearly that's the initial big response that we're seeing to this vote today. I am reading further down some of our stories about tax change plans, and you wonder then as we go through the next few weeks, the early days of the new administration, whether they keep the markets on side. But for the moment, job done.
But in theory, Hungary's about to get a lot of money.
Yes,
out of the European Union.
20 billion euros.
So you just priced that into the economy. Was it priced before? Was there an expectation that was actually going to be delivered upon? It's certainly a not insignificant slug of cash.
It's much more certain this morning, isn't it?
Yeah.
Let us tell you what's coming up on the programme. 8:42 here in London. Coming up, the latest from the Gulf, with just hours to go before President Trump's deadline to blockade the Strait of Hormuz. We'll bring you some details next. This is Bloomberg. Welcome back to the opening trade. We are 46 minutes into a session that looks negative, but maybe not by as much as the futures picture was suggesting. US futures also negative, but not by as much as Europe, but actually they don't look all that dissimilar. E-minis down by 0.6%. Nasdaq futures down by 0.7%. So, guys, still only one sector in positive territory, and that is energy stocks.
Unsurprisingly, as Iran says the US is acting illegally after President Trump vowed to begin a full-scale naval blockade of the Strait of Hormuz. Another full-scale naval blockade, I should point out. But this one is going to kick in at 3 p.m. UK time today. Let's figure out what's going on. Let's go to Dubai. Jemana Pasechi standing by for us. Do we know how this is going to actually operate, what it encompasses, the Trump blockade? What details are going to be important here?
Yeah, well, we don't have a lot apart from the fact that it starts, as you said, at 3 p.m. UK time, 6 p.m. over here in Dubai. There was a notice put up by CENTCOM overnight, and they said that the forces will begin implementing a blockade on all maritime traffic, and this, to be clear, entering and exiting Iranian ports from April the 13th. So it does not apply to vessels that have not stopped by Iranian ports. But in reality, most of the vessels that have gone through the strait since the inception of the war have somehow been linked to Iran. We estimate that around 80% of the vessels that have gone through are Iranian linked, either transporting Iranian oil or have picked up oil from one of the key terminal facilities, including Kharg Island. So this is what we understand is the objective of what the US are trying to achieve. In terms of how they're going to execute it, I think there's still a lot of questions. Number one, in terms of other countries that are going to participate in this, in Trump's Truth Social post yesterday, he indicated that there would be a global effort or other countries would be joining in. We so far do not have any reporting of any countries that have officially decided to participate in this naval blockade. The second element is how other countries will reciprocate. I mean, if they're going after countries that have already agreed to pay a transit fee to the Iranians, in reality, what does that actually mean? If it happens to be, say, a Chinese oil tanker, how are they going to be stopped or even interdicted, which is the language that President Trump used? And then the final question is, how are the Iranians going to respond? And are you actually taking a front of this war to a new level, introducing a maritime front and exposing U.S. naval warships and all of the assets that they're deploying around the strait to the real possibility of being targeted at this time by Iranian drones and the Iranian missiles that could be directed from land. So again, it could all torpedo the ceasefire, very fragile ceasefire that is still being upheld and in theory expires on April 21st.
Yeah, Jumana, it does seem as if there could still be plenty of opportunity for headline risk if we take the battle to the high seas as these blockades get into action. Let me ask you about peace talks then. Are we expecting another round? The Iranians seeming to suggest that there could be further talking. President Trump was not giving that kind of messaging.
Yeah, well, it's interesting because President Trump, in his many Truth Social posts yesterday, did actually describe at the end that by the end of the discussions, there had been a sort of friendly relationship developed between the Iranian representatives and the U.S. representatives. So interesting that he even put that down in one of his Truth Social comments. But he did suggest that there actually had been elements of agreement. And later on, we heard from the spokesperson for the Iranian foreign ministry, and he also said that there were 2 to 3 points that were not agreed on. But so far, it seems as though there actually was a good starting position for them to continue negotiations, that there's been no formal commitment from either side to continue those talks. There's been lots of media within Pakistan suggesting that there may be another round of talks held at some point in the future. That has not been corroborated either by Iran or US. But it goes back to a couple of sticking points. And we understand that one of them is the Strait of Hormuz, which prompted President Trump to announce this naval blockade. And the other is to do with, once again, Iran's nuclear ambitions. J.D. Vance explicitly saying that they did not get enough reassurances from the Iranian side that they will not go on to develop a nuclear weapon, that they have no ambition of doing so, and that they're willing to relinquish the tools that would allow them to develop a nuclear weapon. So nuclear is still front and center of the discussions here, alongside some of the other issues, including the funding of proxies in the region, and Iran really pressing hard on the US to lift and unfreeze some of the sanctions that have been imposed.
Jumana, you're on the ground for us in Dubai. What has the response been from the UAE, from Qatar, from Doha, from the Saudis to this proposed blockade?
So nothing explicit, but I will say that we've spoken to many senior officials, industry leaders around here, and I would say that they're quietly supportive of this move because essentially we were in a situation where Iran was capable of using the Strait of Hormuz, but every other country in the Gulf was not capable of using it over the last 6 months. Clearly, a situation that they did not want to continue or to persist at some point in the future. Plus, questions about precedent. And with all of this talk and reporting of the last couple of weeks of Iran looking to impose a fee or a transit, they said it would set a very dangerous precedent for all maritime shipping routes around the world. And their point has been, and this has been very explicit by the UAE, for example, yesterday, ADNOC CEO Sultan Al-Jaber putting up a post on Twitter likening Iran's hold and grip hold over the Strait of Hormuz to economic terrorism, a precedent which, again, should not be one that the world accepts because it doesn't just affect shipping around the Persian Gulf or specifically to Gulf countries, but also globally as well. It has global economic ramifications. So I would say the reaction from the Gulf states is, let's see how this all plays out. The worst case scenario of a downward spiral has been avoided militarily. Implementation is going to be a big question. But the other big one is, will they actually get involved as well in terms of providing naval escorts or surveillance or even some assistance to some of the seafarers who are trapped in the region as well?
OK, Bloomberg Horizons anchor Jumana Pasecci. Jumana, thank you. Let's take a look at what else we are watching throughout the week. Today, we get the OPEC monthly oil report then, talking of oil and energy. The IMF World Bank full meetings, they start in Washington on Tuesday. We're going to get the IEA oil market report. ECB's Christine Lagarde, president, of course, will be speaking in Washington. And on Wednesday, the Fed is releasing its beige book. Thursday, UK GDP, US jobless claims as well. And this week, it is earnings, of course, US bank earnings in focus. Goldman Sachs reporting today, JP Morgan, Wells Fargo, Citi, Bank of America, Morgan Stanley, all later in the week.
Let us bring this hour of programming to a close with a conversation with Skylar Montgomery-Koning then from the Bloomberg Markets Live team. And in your thoughts as we watch European equity markets then, under pressure, Skylar, down 0.7%, but not perhaps reflecting things being well, it could have been worse for stocks. I mean, oil prices are up 7% this morning, so oil prices are responding, but stocks maybe less so.
Yeah, it's interesting. I knew it was going to be a negative day in equities when I came in this morning because you saw the headlines over the weekend and they were all very negative, but the reaction's been much more muted than I was expecting. And I think that there are two ways you can look at it overall in terms of there's not enough pessimism priced relative to the peak, certainly now, but also relative to the price of Brent. And so if you look at European equities, for example, from the bottom that we got to in March, we've retraced 70% of that. Do you think, conditions are 70% better than they were 2 weeks ago or 3 weeks ago? I definitely wouldn't say so. And for Brent, we've gone from $70 a barrel to $100 a barrel. And that's a stagflationary shock that will have to feed into earnings. And so my big question is just what makes markets realize that? Why are we still so optimistic and hesitant to price the pessimism?
Maybe because you keep getting notes out from guys like Mike Wilson, who's talking about the earnings story. Like the note out, Mike sent this around, Mike Masika sent this around. S&P trailing earnings growth 15%, next 12 months earning up over 20%. Can I hang my hat on that 20%? Because Mike Wilson is.
Yeah, I mean, I think it's quite hard to hang your hat on that because you don't know exactly where energy prices are going. What I will also say is because you haven't had downgrades to those earnings forecasts, risks are definitely to the negative side, right? When you get to earnings season, you have negative misses punished a lot more than upside surprises are rewarded. And so that means the risk is definitely negative as you head there.
On a regional basis, is Asia still most exposed?
Asia is very, very exposed from a where is the oil actually going perspective. And I think particularly now I'm worried if the U.S. does actually block more of that transit through the Strait, you have to think about where was that Iranian oil going. Now, China had held up very well, partly because they had high reserve levels, but partly because they were still getting oil through Iran. Now, it's negative for the market because it means less oil overall, but it means that China could also get involved, and you could see some escalation, whether that be kind of returning to the tensions that we saw during the trade war. But China and the U.S. are your big mega powers in the world, and so if they start to have more of a conflict from an economic perspective, that's definitely negative for markets.
Yeah, absolutely. Skylar, thank you very much. Skylar Montgomery-Koenig from the Bloomberg Markets live team. So as it stands right now, European stocks on the back foot. US futures also a little bit weaker. But did you get a sense you're waiting for the next things to happen in the Persian Gulf?
3 p.m. UK time.
What do we wait for? There's now 2 blockades on in the Gulf. Barrels are not leaving. I don't know. Is that the key metric you just need to watch out for?
Yeah, perhaps. We will leave you with the next hour, Guy,
I'll
on the
still
Pulse.
Be here. Yep, we can try and answer that question.
That is it for the opening trade. The Pulse is up next. This is Bloomberg.